Hello folks, I'm LA and this is today's short take. If you're looking at these stocks and you're saying to yourself, hey, what stock do I need to be in and which one do I need to be out of? I'm going to take two of them that are in the hamburger business, right? One of them is Dave's. We saw earnings come out on this one. Stock propels down, volume picks up. That doesn't look very good on this time frame. If you stretch it out, doesn't look quite as bad, but what I would point out here is that even though it's not as bad, still something's not quite right. I mean, look at your volume spikes, right? Goes back up and tries to test that high. Volume spike down, another one down. Here's another one down. At best, this is probably in some sort of a large consolidation. If you pull this all the way back to the monthly, you can see that that consolidation is up here at the top. Hey, it's had a great run, but it wants to rest, right? It's done what it wanted to do, and now it's just sitting there. But then you move to something like, say, Sonic, which also reported earnings and which got a bump up on earnings and is continuing higher. This is a very different chart. I mean, look at the way this one's set up to the one we just looked. Nice big spike, volume spike, right? Holds that range, right? And then after testing that low, which is usually what happens, right, starts to stretch higher. That's a nice looking stock. That's a nice looking stock after earnings. Very different chart. If you look at it on the weekly, same sort of thing. Nice big bump up, continuing, and you look at it on the monthly, just keeps climbing. Matter of fact, one could argue that on a monthly basis, this is an ABCD structure that wants to go either even farther, right? So, when I look at these kinds of stocks, one looks very different than the other, and that's what you should be looking at when you're looking at whether or not you want to be in a particular stock. Two hamburger stocks, same sector, different charts. Till next time, I'm LA.